Yo, what's going on? Gonna be making a video of my entry model, right? This is just gonna be the intro, then I'm gonna get into a framework example and then actual trade examples, right? So my trading model. Before I get into the stuff, I want to emphasize that this is a IRL to ERL emphasis, right? This is usually how I trade. I'm entering on the IRL, targeting the ERL. I rarely do it the other way, just because this is a lot more continuation focused, right? I'll actually write that here, cont focused. Right. So getting into the high time frame PDA, I'm really just going to be using 15-minute for value gaps, 30-minute for value gaps, maybe an hourly, right? 4-hour gaps I'm usually using for bias, and then I'll maybe drop onto like the lower time frames, use something to continue that move. I don't really use order blocks. I don't really use anything else. Fair value gaps are genuinely all you need. Next step is going to be a TS, turtle soup, but it's really just a stop hunt, right? It's basically like this. I actually should have had this out before, right? But this stop hunt at the bottom, right? That's all the turtle soup is. And then inversion fair value gap. If you're watching a trading model, you should already know what an IFVG is. I'm not going to really go over that. And SMT, right? So if you have all three of these things right here, this is going to be your A setup. Obviously, your high time frame PDA, a stop hunt with a good inversion with displacement, and then obviously your A plus DOL. That's an A setup. And then SMT will just bring that up to an A plus, right? Perfect setup. Everything is where everything needs to be, right? And then A plus DOL, right? What are my A plus DOLs? Number one thing that I love to target is engineered highs. Always a great target. I will delete that continuation thing, right? Engineered highs, they're just easy to target. Low resistance liquidity runs happen on these. Another one could be data highs. I don't really people talk about equal highs and equal lows. Don't really target those. Yeah, engineered liquidity is my butter, or my bread to the butter, right? This is the bread. This is the butter. Another one could be like an imbalance. Let's say like a high within this is like a 15-minute gap. There's actually a setup that I will go over that has this exact scenario. But yeah, so let's go ahead and get into the trading examples. Remember this framework. I'll draw this little diagram. Bam, 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 right? Very simple. This is your key level. This is your stop hunt. This is your inversion. And then right here is your entry, right? And an optional, of course, is an SMT. Right, so this is trade example number 1. This is the low time frame, but we're going to hop on the high time frame because obviously this is most important, right? If this is a continuation model, IRL to ERL, that's what I want y'all to focus on the most, right? If we hop on the 1-hour chart, we can clearly see that we took out all this liquidity and then filled this IRL, right? You zoom out, you notice, okay, we're clearly in a bullish trend, and we're just going to put ourselves on the right side of the market, right? Yeah, a lot of y'all could have seen this huge dump and thought, oh, we're bearish. But guys, look at this huge displacement, right? That's what I want to trade in alignment with, especially after we swept, right? Manipulated all these lows, filled a key level, hit this old mitigation. Perfect, right? And another reason why I'm picking this trade is because I actually took this literally this week. As of recording right now, this is May 1st. I took this yesterday on Wednesday, the 30th of April, right? And then this is the framework of basically the model, right? Remember earlier how I wrote out all these engineered highs, and then one of them was like a 15-minute gap. This is exactly like this trade, right? That's exactly why I mentioned it as well. So you can see we hit this 1-hour gap after stopping people out. So people had their stop loss here, and we swept them, hit a key level, no SMT, so this is an A setup. And then another thing I want y'all to notice is whenever we create this inversion, it isn't just an inversion, right? There's another thing to it, and that's displacement. Arguably the most important thing for my trading is displacement. I don't want a weak close. I don't want to close with a huge wick at the top. I want a body close so far above this gap, it literally, it just disrespects the gap. There's no resistance, there's just nothing to it, right? Close above, that's all I want, right? We get like a 20-point close above. If you saw my trade recap, then you already know this. Enter here. I had my stop loss below the gap, and I targeted this 15-minute, right? Low resistance, or not low resistance, low hanging fruit. Very, very simple trade. Honestly, a perfect example, right? I did have a conviction to this high, but guys, I got my 1-to-1 and I was out of there, right? I don't want to spend too long explaining this model. I'll probably give y'all like maybe 2-3 more examples, but this is a perfect example of price, right? Clean stop hunt, hit the hourly gap, super good inversion, right? The displacement is amazing. The targets are amazing, right? 9:30 opens. 9:30 doesn't manipulate anywhere. It goes lower. We don't even take this high into an imbalance. Where do we go? We go lower, have a stop hunt, key level, inversion. Where are we going to go next? We're probably going to reverse, right? For those of you who know what a Judas swing is, this was our Judas swing. And this ended up being low of day. So definitely a good setup. Yeah, let's hop on the next one. Okay, this is trade example number 2, right? This is a short setup. This is an A+ entry, right? So the last one was an A. This is an A+, arguably even better to study. But you'll notice in this example, right, because it's a little harder to see it over here, but this is a lot more clear. I actually add change in the state of delivery to this model. Now, is this a necessity? Absolutely not. I personally prefer IFVG over change in the state, but combining them together only serves to benefit you because they are both confirmations for your entry. But obviously, you don't need change in the state. You can just do this model with only inversions. That's how I usually do it. But if there's a change in the state along with my model, it only aims to benefit me, right? So that's something to notice. Going on the high time frame, because again, what are we trading? IRL to ERL on the high time frame. This low time frame model does not distribute price. This is how we get accurate entries and don't get stopped out. But what is distributing price is IRL to ERL and ERL to IRL. So we hop on the hourly time frame, obviously to get our bias. Now I will go ahead and delete the stuff, right? We're obviously in a bearish trend. Not only did we fill this daily opening gap, but it happened in London. If you add, like, basically just draw on liquidity, right? What do you want to add for other draws? Well, adding daily profiles is important. If London manipulates, Asia accumulates, right? So what is a very common model? AMD. If Asia accumulates, London manipulates, what are we going to expect New York to do? Distribute, right? And that's exactly what I was looking for in this session. This is actually a trade I did take. I'll show executions at like the very end or something. But the reason why I like this trade so much is not only is the high time frame aligned, but there's enough internal targets to where I don't have to target all the way down here, right? Let's say, like, I'm not going to go back and mark it out, but let's say like the hourly low was here. I don't have to stretch out my TP and get a far away target, right? I can take the low hanging fruit for this 2RR trade and be completely fine, right? So the reason why this is so good is, again, displacement, right? So this SMT gets put in, and now I know we don't close that far below the inversion, but one thing to notice is how did the candle itself close, right? This is a very discretion heavy model, so you got to apply discretion. I'm sorry to say it, right? But this candle is a 32-point candle. It is coming out of a fair value gap. It just had a stop hunt with an SMT. We have a change in the state and an inversion both in one candle. It's very directive. It's telling you the bias, and there's no daily dallying, right? Like, there's no like, oh, I don't know where I want to go. This candle is telling you I know exactly where I'm going to, and that's the exact entry I want to take, right? Things that made this trade so good: we have one swing low, another swing low, and then another swing low before our high time frame draw. I actually will show you on the hourly, right? We have these stacked lows right here. What is the model? IRL, which could be this hourly gap, this daily opening gap, to what? ERL, which is external range liquidity, right? These hourly lows, these Asia lows, it's bread and butter, I'm telling you. My next video will be over IRL and ERL, by the way, so I would definitely recommend watching that. But A+ setup, really perfect. Targets are great. Literally zero drawdown. I will take this trade 10 out of 10 times. It is genuinely perfect. yeah, really don't want to waste y'all's time going over models. These are just examples, right? Study this. This is the 16th of April, a trade I did take and a trade during this month that you can look at. All right, let's hop on the next one. Okay, here we have another A plus example, right? All criteria is met, high time frame, PDA, stop point, SMT, strong inversion, right? But this is a data or a news candle example, right? So you can see in my little diagram, I have out data low and data high. That just means news candle high, news candle low, right? In this scenario, we tap on the 15-minute, sweep data low. Now I would show you the higher time frame, but this is on TopStepX, so I can access the 30-second. But you get it, right? We're continuing the trend from all the way down here. We've been bullish. That's what I'm looking to trade in alignment with, right? As long as my criteria is met, I'm always going to take a continuation, right? So this is our IRL, our internal range liquidity, which is this fair value gap, targeting ERL, which is this data high. Oh my god, I can't speak. Anyway, so we sweep data lows, then we have a resweep of that same small low and put in an SMT. So what this means is ES held the low and started distributing, versus NQ had an extra leg of manipulation, put in that SMT, which is just a crack in correlation, and then we inverted the gap. And again, right, I've said this with every other setup that I just shown, or that I've shown, displacement, right? Yeah, we only close about 7 points above the gap, right? But remember that last example where discretion is obviously needed. Look at how we react after sweeping in this 15-minute gap. We sweep, this next candle has a close up, and this is a 30-second candle, by the way. And then the very next candle, we completely displace, right? This is a 32-point candle, just like the last example, and that took 30 seconds, right? That gives me direction, it's telling me where to go, and it's giving me conviction, right? Now there's an entire like data high, data low model, but this is a very important liquidity sweep. Not only did it happen in an imbalance, but then we had a second one and an SMT. I think I made about $13,000 this day. It was like 2.6K on 5 XFAs for about 4 RR with 0 drawdown. This is why I love this model, right? Not only are you putting yourself on basically the best side of the market, which is continuations, but you're adding an even better entry model to that continuation, right? You're adding that accuracy, protected stop, like nothing. For you to lose with an SMT, a stop hunt, and a high time frame PDA, if you lose that trade, it most likely means that you're on the wrong side of the market. And that's why this model is so perfect, because as long as you can identify the right DOL and basically just the right conditions to trade in, the right continuation gap to take, you will basically never lose. My win rate with this is like 70 to 80%. I've had a week where I didn't take a single losing trade using this model, even without the SMT. But if you take it with the SMT, you'll have like an 80% win rate model, but it'll be very infrequent, right? This setup may appear like just a few times a month, so definitely on the rarer side. But again, right, I want to talk more about the liquidity, because what is actually driving price, it is not this low time frame model. This is just so you're accurate and you don't have to deal with a wide stop or a lot of drawdown or getting stopped out before we go to the DOL, right? What matters is, and I've said this once, I'll say it again, IRL, okay, don't know why that didn't work, IRL to ERL, right? What are we doing in this scenario? We already swept ERL. Then what did we do? We tapped into IRL, internal range liquidity, which is that fair value gap, that high time frame PDA I always talk about. And where are we going to? External range liquidity, the other side of the market, right? Swept data low. This is ERL, IRL. Where are we going to? The other ERL, right? And along with that, we get a few engineered highs, is what I call them, which are just perfect, right? It's like that trend line diagram, right? Bang, 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 bang. But that comes in all different shapes and sizes, so you got to watch out for that, right? But you can see that in this example, right? We have this internal high. We have this high right here, this swing high, right? Even though we didn't hit the gap, this is a swing high. Liquidity is there. And then on top of that, we have this one right here. So we have 3 swings before our full draw. That's perfect liquidity, right? You could have taken a TP here, right? This could be low-hanging fruit. Now, in this scenario, I actually didn't take low-hanging fruit, but that's because my conviction was so high, right? Had this just been a regular low and we had like some random high up here, I probably would have taken it to this, maybe this high. Definitely not this high just because the RR would be horrible, but like this is a good TP or this is a good TP. But the fact that this was data highs gave me that extra boost of conviction, confidence that like, okay, I've seen this play out 1,000 times before, and this is going to be the 1,001st time I see it play out, right? So that's why I held all the way to the top. Again, I fucking love this model. Focus on IRL to ERL. Focus on continuations and displacement, right? If you use this model right, you will literally have a 70 to 80% win rate and just be so comfortable in trading, right? Not only is it easier to manage your psychology with this trading model, you get fucking paid for it, bro. Out of 10 days, you're going to win 6 to 8 of them, right? That's so easy. You just have to watch your mental for 3 days. For 3 days out of 10, you have to follow your rules and walk away with a loss. Literally, the easiest way to get profitable is by using this model, focusing on continuations, focusing on A plus DOL, right? It all comes down to the draw on liquidity, and you do that by using IRL, ERL, and then the type of liquidity you target. Engineered highs, and it's a data high as well. It could not be better than that. Maybe if we had equal highs on fucking every swing, but that's super unlikely. But just to add more, so swept more liquidity here. I don't want to get into like the smart money side of trading, but this is stop orders that got swept out and filled by the big banks. But you really just want to focus on this data low and this data high. So yeah, that's 1A model, 2A plus with a data example. I'll pop in like some executions. Literally the easiest trading model you can do. You're just using an inversion with a little bit of extra spice. If you truly want to max out this model, and I'll write it out again for y'all, high time frame PDA, turtle soup, IFVG, SMT. I'm only looking for 4 things. I didn't write that down. High time frame PDA. This is all I'm looking for. Trading doesn't have to be difficult. It really doesn't. And this model allows for that. Anyway, I don't really have much else to add. I hope y'all enjoyed. My next video will be about IRL to ERL, just to kind of expand upon this model, but I just wanted to get this out for y'all so you actually know how I trade and can replicate it fairly easily. If y'all have any advice on how to improve this or just like what to do next, yeah, let me know.